One of the most important responsibilities of a small business owner and their accountant, if they have one, is to manage the company's cash flow. It is exceptionally critical to use a cash flow forecast during a crisis like COVID-19 or an extremely low season in your business. As the CEO, you need to focus on not only earning more money in your business, but keeping more money in your business. Basically, maintaining a positive cash flow. Now, today, I am going to walk you through how to accomplish that by creating a 13-week cash flow forecast. I have even included a link in the description for you to download the pre-designed cash flow forecast and just plug in your numbers. For those of you that are not familiar with me, my name is Octavia. I am the CEO of Say Yes to Profits, a full-service accounting firm. We help CEOs build businesses that earn their first or next $1 million while paying zero in taxes and maintaining fiscal responsibility. To date, we have helped over 90% of our clients grow between 30% and 350% within 12 months and save well over 55% on their taxes. One of the ways that we help our business owners accomplish this is by creating and maintaining a cash flow forecast. So you may be wondering, well, what is a cash flow forecast? A cash flow forecast is a plan that shows how much money a business expects to receive in and pay out over a given period of time. Now, hearing that definition, you're probably thinking, well, I have that on my profit and loss statement, but you actually don't. A cash flow forecast is different from a profit and loss statement because your P&L only shows the revenue that you've earned and the cost that you've incurred for a period of time. It does not show if and when the money entered or exited your business. That is the big difference between the two. You can earn revenue, but yet not receive it in your business. So therefore, you may show a positive number at the bottom of your profit and loss statement, but then you log into your bank account and no money's there. As a matter of fact, over 50% of companies go out of business actually showing a profit at the bottom of their profit and loss statement, but had no money in the bank. So how do you know if you need a cash flow forecast? Well, I'm going to give you a few reasons. If you look at your profit and loss statement and you feel really great about your business, but then you log into your bank account and you feel like, you need a cash flow forecast. If you often run out of cash before the end of the month, or it seems as if you never have enough to cover your expenses throughout the month. If you desire to make a large purchase or invest in something huge in the future and you want to know if you're prepared for it or how to prepare for it, then a cash flow forecast will help you. If you desire a plan for how to prevent or prosper during a crisis, you need a cash flow forecast. And last but certainly not least, if you desire true financial visibility into your cash flow in the future, a cash flow forecast will help you. A cash flow forecast is a part of your financial plan, and having a financial plan for your business eliminates anxiety and the inability to sleep at night. Now, as we go through creating your cash flow forecast in just a second, you want to think about creating 3 different scenarios. The first scenario is the best case. If the crisis ends, let's say within 3 months, and you lose only 10 to 20% of your revenue, what financial position will your company be in? What does that look like for your business? Mid case. If the crisis ends in 6 months and you lose 25 to 35% of the company's revenue, what does that look like? And worst case, if the crisis ends in 12 months and you lose 50 to 70% of the company's monthly revenue, how will your company survive? Your cash flow forecast will give you those answers. What I want you to remember is that a cash flow forecast is a projection of the company's future financial position based on anticipated payments and receivables. Now, when you create the 3 scenarios we just mentioned, I want you to ask yourself a few questions. Number 1, if this happened, what costs do I need to reduce or eliminate? And how much money do I need to bring in? Number 2, how much cash do I have or will I need in the bank in the next few weeks or months to thrive during this crisis? Question number 3, do I have any cash equivalent? Cash equivalent are those items that can quickly turn into cash. Now, there are a couple of different cash equivalents, and I'm going to give you 3. Number 1, outstanding receivables. Outstanding receivables are when you have provided the work to your clients and you've invoiced them, but they have yet to pay you. That is money that can turn into cash quickly, but you don't have it in the bank at this time. Number 2, inventory. So if you have inventory around your office that you're not using at this time, how about you offer that into the marketplace and see if you can make quick cash? A perfect example is the Say Yes to Profits Now book behind me. This is inventory that I can offer to the marketplace. Number 3, if you have offers that will cost you $0, but you can make money from it, those are cash equivalents. Again, I want to stress that your goal is to maintain a positive cash flow regardless of the current crisis going on in your business. Now, before I jump into the cash flow forecast, I'm often asked, what should I include on my forecast? You want to include all of the amounts that you expect to receive in your business and release out of your business. If you miss something, your cash flow forecast will not be as accurate and as helpful as you desire it to be. So let's jump over to the cash flow forecast so that we can begin to create it for your business. When you click the link in the description, you're going to receive this pre-designed cash flow forecast. I'm going to walk you through how to complete it for your business. The first step is to enter your company's name. We're going to call it the Best Business Ever LLC. Next, you're going to enter the start date. Your start date is going to be the start date that you want to begin creating your cash flow forecast. So we're going to say 5/20/2020. Now, when you enter your start date, you're going to notice that the cash flow forecast is going to pre-populate the next 13 weeks for you. There's nothing you have to do there. The next step is to enter your cash balance alert minimum. Now, your cash balance alert minimum is the amount you don't want your bank balance to go below. I recommend that you have at least 3 to 6 months worth of operating expenses saved in your account. But I know that during a crisis, you may not have the luxury of doing that. So what I would recommend is that you at least have 1 month's worth of your operating costs saved into your bank account at all times, and your goal is to never go below that. So for the purpose of this example, we're going to say that your monthly operating cost is $7,000. That is the amount that we're going to include here. You will notice that when I entered the $7,000, these amounts turned red. That is because right now, those balances are below your balance minimum. Once we start entering the figures and you go above the balance minimum, then those amounts will turn black. Your goal is to remain in the black and not in the red, okay? The next step is to enter the cash on hand. So when you do log into your bank account and you see your bank balance, you're going to enter it here. So let's say you have $7,500 in your account. You see how everything turned red? But if you had only $5,000 in your account, you see how everything turned black. But if you had $5,000, then it turned red, okay? So we're gonna go back to 7,500. You started in the black, yay, kudos to you. Now you're going to enter the amounts for your money in and the money out, and you're gonna enter each category. It is important that you enter the exact amount and when the money is going to enter and when it is going to exit. You wanna enter it within that week, okay? So let's start to enter your money in categories. So let's say you have reoccurring monthly revenue. You're going to receive PPP funds. You have a new client that you're pretty sure is going to sign up for service. And then you have passive income, basically new money. We all love new money, right? Next, we're going to enter the money out categories. So maybe you have the very first thing I would say is your CEO salary. That should be first and foremost, no maybe. Then you have your staff payroll. And then maybe you have contractors working for you. The reason I entered these three categories first is because oftentimes payroll is the largest expense most businesses have. Now we're going to enter the remaining categories. Next, we're going to enter your accountant expense or investment. We cannot forget about this important person, right? Say yes to profits, shameless plug. Then you have your rent. Finally, we're going to enter bank fees. And then we cannot forget about marketing. And we cannot forget about education and training, just to name a few. Now, as you go through this list, if you have any additional ones, you can simply copy any lines and you can insert. If you do that, you want to make sure that you go over and you copy the formula down so that it does not mess up your cash flow forecast. So you see how that works? So now we're going to go and we're going to start entering the amounts in each category. So let's say that you know each month your reoccurring monthly revenue is $3,000. So on the first of each month, we will go through and we will enter $3,000 for June, $3,000 for July, and $3,000 that first week of August, right? Then we want to enter your PPP funds. So you know your PPP funds are going to come through next week, and it's going to be $10,000. And that new client that you just spoke with, they're going to sign up and they're going to pay $2,500. And then you know on average that for your passive income, you usually earn about $150 per week. So we're going to put $150 and then we're just going to drag it over to the end of the 13 weeks. You see how that works? So now you see that for the next week, you're going to estimate that you're going to have in $2,650, right? So now we're going to go through and enter your money out. So let's say you pay yourself a CEO salary of $2,500 each week. So we're going to enter $2,500. And again, we're just going to drag it over. The spreadsheet is going to do all of the calculations for you. And then for your staff, you pay them $3,000 every other week. So we're going to enter $3,000 every other week. Keep it going. And then for your contractors, you pay them when they work, and you know that they're going to work next week. And you're going to have to pay them $3,500. They're going to work another week from then or a couple of weeks from then. And you're just going to enter the amounts that you're going to pay your contractors. Do you see how after you've entered all of your payroll, you notice that in week 2 of June, you begin to go into the red, right? You begin to go below your cash balance minimum. That lets you know, okay, I need to do something. Maybe I need to earn more money, or maybe I need to tell my contractor, I don't need you to come that week, and my staff and I are going to handle whatever the responsibility is. So you see how this forecast begins to help you see things in the future so that you can prepare for them and make adjustments right now. So let's further play around with it a little bit. We told our contractor, we don't need you that week. We're going to work this out ourselves. So then you enter your accountant's investment. And let's say you know that on the first of each month, your accountant investment is $750. So you go ahead and enter that on the first of each month. 1st of July, June, and August, all right? And you know that you have a co-sharing space and your rent is $250, and that comes out on the 1st of each month as well. So we enter that. So now looking at this information, now you further have to make decisions because you are below your bank balance minimum. That is what this cash flow forecast is about. And you can further go and enter additional information. But what I want you to see is that when you use a cash flow forecast, you really begin to get a clear picture of the true financial health of your business in the long run, and you can now prepare for it. Another quick thing I want you to remember before we close out, when you're completing this cash flow forecast, you're going to have a total for the money in and a total for the money out. What you want to make sure is that your total amount going out is always less than the total amount coming in. So for example, we see that for next week, your total amount going out is $5,500. Your total amount coming in, $12,650. You're doing perfectly fine. Then we go to the following week. We see that, let's find a week where it's more. So on week 3, you have $5,500 going out and you have only $150 going in. That is a huge red flag that you must correct immediately, because you want to maintain a positive cash flow at all times. So hopefully this helped. If you're watching me on YouTube, make sure you subscribe to our YouTube channel so that you can receive more lessons like this. Also, click the link in the description so that you can download your free cash flow forecast. This has been Octavia Conner. Until next time, subscribe, and say yes to profits. Toodles!